Are you looking to invest for a big return but are unsure which suburb is up and coming and guaranteed to give you the most bang for your buck? Smart Property Investment and Pure Property Investment have unveiled the Fast 50 2024 report, identifying the suburbs backed by research that are giving investors the highest returns. Don't make any investing decisions until you read the free report. Visit smartpropertyinvestment.com.au to download the report.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone. Welcome back to a brand new episode of the Smart Property Investment Show. I'm Grace Ormsby. One of my favorite things to do, one of my favorite things about my job and working in the Smart Property Investment team is getting to talk with investors about their own personal journeys, their wins, their losses, their learnings along the way. And today is no exception to that. It is an absolute pleasure to be chatting with Lauren Croker for today's show. Lauren, welcome to the show. Thank you so much for taking the time.
Hi, Grace. Thanks for having me on again.
Lauren, I got your email a few months back and you said that you absolutely love listening to the show. And it's people like you and seeing those kind of emails that of people that just, take in the information week in, week out, are avid listeners to the SPI show and what we're about. And it's people like you that we want to be talking to because you yourself have a property portfolio. You work actually within the real estate space as well. We'll probably touch on that just a little bit, but yeah, you got in touch and you just said that the amount of time that you spend in your car is when you listen to all your podcasts. You do a lot of driving.
Yes, I absolutely do a lot of driving. I'm a rural sales agent, so I cover a lot of country every week. So it's really good to have you guys as something to keep me entertained throughout all those kilometres I do.
When did you first become interested in property?
I think I've always had a bit of an interest there. My dad, he has always, he's a farmer, but he's always invested well in property. So he's got obviously his farms that are his main income, but then he's also got residential properties as well that he's always had rented out. So he'd always encouraged all of us to save up a deposit and to get into property at an early age. And that's what really stemmed my interest, I suppose, and has continued on as I've gotten older as well.
How important is having that source of, and we'll get to sort of your goals and strategy a little bit later on, but how important has this been for you to have going along as a property portfolio?
For Dad to encourage me to buy something early on, and obviously we'll go into that more later, it's just been such a good stepping stone for later and set me up for, now and for years to come as well. I think it's, without going too far into goals, because I know we're going to go with that later as well, but it's just so important for me as a farmer's wife, to have an off-farm income that, can potentially drought-proof our operation as well. So
that brings me to my next question, which is around, for those that don't know much about you, you've just given away that you're a farmer's wife and you're a rural sales specialist. What else makes up you?
Well, I guess that's pretty much it. We've got a family. We have a farm at a place called Taralga, which is near Goulburn in New South Wales. I grew up on a farm close by to Goulburn as well. My family farm is still there. And I guess that's pretty much me in a nutshell. Farmer's wife, sales agent, stepmom to 3 beautiful children, and hopefully, more children to come along the way.
So how many properties do you have in your portfolio at the moment?
So I have 3 rental properties in my portfolio at the moment.
We were chatting about this in the days leading up. I just want to give everyone else a bit more context. And you were like, it's only a small portfolio. And I was like, no, it's substantial. It's not just 1 or 2. You've got 3. And as well, like, you're still young. You've got plenty of investing ahead of you, I'm sure. But it's important, I think, to be showcasing that property portfolios do come in all shapes and sizes and are tailored to different people's individual requirements.
Yeah, definitely. And I was only just talking to my stepson this morning about it, actually, where I was talking about equity and how I spent such a long part of my life not knowing what equity was and how to use it. So, I was trying to explain to him how if he buys a property early, then he'd be able to continue to use that to leverage more purchases later on. And that was something that I never, despite Dad being a really good investor, he hadn't really explained that to me either. So there's such a big gap between when I bought my first property back in 2011 to when I bought my second property, which was in 2020, because I was under the impression that I had to pay that mortgage off before the bank would give me money to buy another one. I didn't really quite grasp the concept that if I had a bit of it paid off and it had capital growth in that time, then I can tap into that equity. It just wasn't explained to me. And I think it really needs to be taught more to teenagers and really drummed into them. I mean, not even teenagers, everybody, really.
There you go. Already a lesson taken away from this episode. So Lauren, talk us through then that first property that you did purchase, and let's even take it a step further back than that. When did you decide you were going to take the plunge, and how did you go about getting that first property?
Dad really just shoved a property in the paper under my nose back in 2011. So when I was 16, I was in a car accident. That's horrible, but thankfully no one was terribly injured. But I did receive an insurance payout from that. And with that money, I just had it sitting there in an account. I had, surgeries and what have you. It paid for all of my medical bills. And then there was a lump sum left over that was to then be there in case I needed more surgery later on down the track. And we didn't really want to have it sitting in a bank account doing nothing. So that's where Dad shoved this, newspaper clipping underneath my nose, and he said, let's go and look at this. And I was like, oh, what do I need a house for? I was 20 at the time, by the time this had all rolled out.
Mm-hmm.
And anyway, I just got to the point where it was around the corner from my nan's house. It was on a really big block close to the main centre of Goulburn and was at a good price. So with Dad's urging, I bought it, and that's
became
where
a landlord.
Became a landlord. I actually moved into it for 12 months and then I rented it out after that.
And what was the choice of moving into it? Was it to access some of the schemes available at the time? Or?
Yeah, so the first homeowner's grant at the time did require you to live in it for at least 12 months before you could rent it out. So I moved in, and I actually had a friend move in with me, and she paid me rent for the spare bedroom during her uni school holidays, and that helped me to get through for that first 12 months. And then off I went and moved people in. So
So how much, if you don't mind me asking, how much did you purchase that property for at that?
So
point
that one
time?
I purchased for $222,000, and obviously I had a deposit there ready to go. Dad also helped me, and he chipped in a little bit as well, which he's done with my sisters as well. Yeah, basically from there just collected a little bit of rent on the side from my friends. So that was very good to help me pay that down a bit.
Every last cent helps, I'm sure. Do you still have that property?
Yes, I do.
I feel like from what I've seen of Goulburn house prices over the last decade or so, you've probably got some decent capital growth on that.
Yeah, absolutely. So obviously being a real estate agent, I keep my eye on what it's worth. It's currently worth anywhere between $550,000 and $580,000.
Wow. Pretty good.
It's only
pretty good gain.
a little 2-bedroom house, but it's on a big block. So eventually, if it comes time that house is in not good order anymore, then I'll probably knock it down and potentially build townhouses or something like that on it.
Mm-hmm. So plenty of scope still for the future.
Yeah.
How has that gone over the years for you then? Has it always been really easy to rent out?
Yeah, I've never had it vacant for more than 2 weeks, which is, cleaning time and advertising time.
Okay. And I mean, obviously it was a little while before you then made the next plunge of a purchase, but how did the rent go over that period? Was it covering the mortgage for most of that time? All of that time?
For probably half that time, I was chipping in some of my own funds as well. But when I'm saying that, I'm saying maybe $50 a week, if that, just to cover rates and things like that. But basically, it pretty well just chugged along, paying for itself. Now it's got a yield of nearly 7%, which is good because it's capturing that capital growth that Goulburn's got as well.
Yeah, wow. You won both ways. Win to Dad and win to you for following through and it was your money at the end of the day that set up for that purchase to happen.
Yeah. Well, thanks, Rexy, for that one.
We're going to take a quick break there. Don't go away. Still plenty more to unpack from Lauren
Stop
Croker's property
overpaying on
portfolio.
your home
See you on the
loan.
other side of the
We
break.
understand that managing your finances can be overwhelming, especially as interest rates continue to rise. With access to 70 plus lenders, our team of specialised brokers will find the best rates for your specific needs. Count on us to secure a lower rate swiftly, giving you the confidence you deserve. Book an appointment with one of our experts today to protect your financial well-being and secure your future. Call us now at 02 8866 2444 or visit our website at finny.com.au.
Welcome back to this episode of the Secrets of the Top 100 Agents. I am joined by Lauren Croker, who has 3 properties in her portfolio. We've talked through the first one. I'm curious, Lauren, where the point came where you did learn about the equity lesson that you said you didn't really get in your teen years when you bought that first property. Because, I mean, a pretty big gap between the first property purchase and the second property purchase. You wouldn't be the only person who would ever be like that. I'm sure there's plenty of people listening that probably have had the same experience. But what did you spend your time doing over those years? Were you looking at other investments, or was it just not really on your radar?
It was definitely on my radar, but as I mentioned before, I was sort of under the impression that I really needed to either pay off my loan or heavily pay it down before I could be a potential candidate for the bank to give me more money. So I worked hard. I saved a lot of money working 2-3 different jobs at different times, but I got the travel bug. I spent a lot of time traveling overseas. So I spent a lot of money doing that. It's obviously not cheap, but then I thought I'm only young once. Young, I was single. I thought I'll just go and live life and I'll still have that property in Goulburn to fall back on. It wasn't until, also during that time I did some renovations on that house too, which I borrowed against the house to be able to do those renos. It wasn't until probably 2019, I think it was, my eldest sister, she decided that she was going to use the equity in her house to buy herself another property. And I was like, oh, how do you do that? Because she told me she wasn't going to tip any of her own money into it. And I was so interested. I was like, well, if you can do that, how come I can't? So she, I sort of watched what she did through that process, and I sort of thought, well, I might just go to the bank and see what they say. Like, they can only say no. Mm-hmm. So basically I went in there, told them what I wanted to do. I'd found a property that I was interested in the same town where my sister had bought and where she lives, which is a little place called Gilgandra near Dubbo in the central west of New South Wales. And basically the bank said, yeah, whatever you want, we'll give you the money. We can use the equity out of your old house, and you won't need to tip any of your own funds in. So I went and searched really hard then for a property and ended up landing on a block of 3 units. Gilgandra is not a high capital growth area at all, but very high rental yields. Mm-hmm. So that was the attraction there. It was a bit of a cash cow.
There you go. Look at 3 units. That's pretty good going.
Yeah.
How much did that set you back?
$275,000.
Oh my goodness.
Yeah. So it's like monopoly money sort of. But, I mean it's still a lot of money. But
even then, that would have seen some growth through COVID. Not that you knew or anyone knew that was coming.
Yeah. So purchased that in 2020. And it's only had a modest growth, so it's probably worth about $340,000 now. But in saying that, I bought it as one title, so there's a potential there to strata those units and sell them separately later on, or even just to increase the value of it by then and use that equity again with them being separated to buy something else.
You have a lot of knowledge about, the title and the strata and the ability to add value through renovations. How much of this do you attribute to, I guess, your background and what your dad and even your sister have instilled in you? And how much of that has actually come, I'm curious, from working in the real estate space?
Well, my real estate experience where I work is more in the rural property area. So I'm not dealing with strata and, even I've only sold a handful of residential homes in the time that I've been a real estate agent. So I can't attribute much of my knowledge to that. without sounding, again, like I'm plugging too many shows, but I listen to so many podcasts and I just absorb all the information that I hear while I'm in the car. I've got nothing else to think about, no other distractions. So I basically just listen to what other people have done and lean on their success and try to copy that. I'm just a thief, basically.
I mean, people are probably listening to this episode thinking the exact same. How much then? Sorry, let's go to the specs of these units. Are they 1 bedroom, 2 bedrooms?
There's one better and the other 2 are 2 bedrooms.
Wow, so it's a little bit diverse even within the one property.
Yeah. So they're collectively they're getting $640 a week rent. So that puts the yield at around 10.5% with that one, which I'm really happy with.
Yeah, you've done well on the first 2, so I can't wait to see what the third one is about. Talk us through what's happened since then.
Yeah, so just last year I went back to my banker and I just sort of wanted to have a meeting with her to say, look, I want to buy another property. What do I need to get myself into the position to buy something? Because it had only been 2 years since my previous purchase. I wasn't expecting to be able to buy anything that soon. But basically she had a look at the numbers and she said, well, actually you've got this number to play with, go shopping, basically. So the number that she'd given me was, I think it was sub $500,000 that I was able to borrow at the time. So I went shopping in Wagga. Again, this was from information that I'd collected from podcasts and things that I'd read. And I mean, Wagga is such a great place. It's got so much going for it. It's got unis, it's got the RAF base, it's got an abattoir, it's got so much going for it, so much industry, and still a lot of growth to happen there. It's also somewhere that I'm sort of familiar with. It's not too far from Goulburn. We had a farm down at Tumut at the time, so we were spending a lot of time down in that direction. I felt comfortable to buy something in that area. I did struggle to find something that I liked that was under the $500,000 mark.
I'm guessing that the prices did go up a lot as well as a result of COVID there too.
Yeah, they did. They had about a 60% growth over that 3-year period down there. I mean, most places had a lot of growth too, but that was one that I was definitely keeping an eye on. But I struggled to find what I wanted that didn't need a lot of work in the price range that I was given. So my husband and I, we've been married since then. So he decided that he would put some money towards it as well, and we would get something better that we didn't have to do anything to right away. So we ended up finding a property there, 4-bedroom, 2-bathroom, standalone home in a really nice neighbourhood, close to schools, cafes, a little shopping centre, fuel station and bus stations and stuff like that. It was $575,000.
So not much higher to get something worthwhile.
Yeah, that's right. Brad put $75,000 towards the purchase of it, so we were able to get what we wanted in that, just that little bit higher to get a more quality property. And we were able to secure a unicorn tenant. That one at the moment, we've actually managed to get $1,050 of rent per week.
Wow.
For that one, with a company that does their own inspections and they keep maintenance up and stuff like that. So we're so lucky to be able to stumble upon those people. And I'm not going to give that secret away, but yeah, it was certainly definitely worth the while. So needless to say, we're looking for another property to put these same people, this same company into as well.
Okay, cool. I mean, obviously you've had 3 properties of success. I'm curious, if you don't mind me asking, you've gone through it yourself the first 2 times and now you're doing it with your husband. Is that sort of going to be the strategy now going forward to always go into these things together? How separate then are your first 2 investments?
Well, all of the investments are in my name, and our farmland is all in my husband's name, and that will probably continue to be that way unless we buy more farmland together. One thing that we didn't think of until we had an appointment with our accountant is the tax implications for us buying them as individuals or together as a trust or whatever like that. So moving forward, I think there's a potential that I might be getting towards that land tax threshold where it might not make sense to continue to buy them in my own name. So we will get advice, and we are still yet to get that advice on how we will structure future purchases, whether that will be in a company, a trust, or whatever else there is available to us, to make sure that we're not getting more tax implications with it.
I mean, good to know that you're working with an accountant on that. You're approaching the problem as it arises. There's probably been no need to do it until now, and as the property portfolio gets bigger, there's obviously more to think about. Yeah.
Yeah.
What are you looking at next? I'm curious, because you've obviously had a very regional skew up until this point. It's obviously what you know and what you're comfortable with. Will you continue that way?
Yeah, definitely. So for any of our off-farm, residential type investments, we'll continue down the regional path. So I mentioned obviously Wagga, that's still a very solid thing. And I believe the prices there still haven't caught up to that of Goulburn. So Goulburn, I think, is a great place to invest, but at the moment it's just not making sense with rental yields. So looking at Wagga and Dubbo, two, great regional centres that have seemed cheap compared to Goulburn prices anyway. There's also a little town near Goulburn called Crookwell, which hasn't exploded yet. I mean, prices have gone up by 26% over the last 12 months there, and 8.5% over the last 10 years. So, I can see that it will be a good place to buy potentially, if I can find the right place there. But I'm not as comfortable with that as what I am with Dubbo and Wagga.
It just brings me to my next thing, which is around, how much have the recent price gains, filled you with a little bit of alarm? Do you think they're going to stay as elevated as they have for the last couple of years?
Look, I think there's got to be a steady at some stage, particularly once the interest rate rises steady. We'll probably see those prices potentially either go up a little bit again, or we might see more stuff come on the market too. I mean, I feel like I'm stumbling a little bit with that question, but I think we've got all these people coming off the fixed price mortgages, which might bring more stuff onto the market and have some more opportunity there for investors. I don't know what that'll do for the pricing. I guess that it will eventually push them back up again, but hopefully, there'll be some good investment opportunities out there for a little while anyway.
You're sticking with New South Wales for the foreseeable future with all of this?
I have actually looked into Queensland markets. It's just been, when I was looking at that, the Queensland government changed a few of their regulations around out-of-state investors buying there. So that sort of, put a bit of a dampener on that at the time, and that's when we bought that one in Wagga.
Mm-hmm.
Definitely wouldn't rule it out. It just so happens that I've got these other properties at my fingertips that I can go and see myself, and if I can't see them, then I've got trusted people in those areas where they can look at them for me. So, yeah.
Absolutely. How big would you like to see your property portfolio get, do you think?
Well, I'm not greedy. Obviously, I would like to grow it a lot, but the main aim of what Brad and I want to do is to be able to be in the position to be able to buy more farmland that's close to our home farm when the opportunity arises. But we also know that we've got children to add in the mix there, and we want to be able to have the opportunity for them, if they want it, to be able to come back to the farm and run that one day as their business. So if they do want to come back, we need to have an income to rely on, because we're not going to be able to work on the farm anymore if we've got kids there, to be able to, have that as our retirement fund as well. So we don't live a lavish life by any means, but just to be able to be comfortable in retirement is probably the main thing, and to be able to be there to assist our kids to do the same thing that we're doing, to, build their empire and be there to give them assistance if they need it. I mean, I don't want to give out handouts, but if they're working hard towards something, we want to be in a position to be able to, give them a bit of a slap on the back and help them where they need it. So, yeah.
For sure. I mean, you can throw the newspaper article in front of your nose with listings down the track. You know that quite well.
Yeah, that's right.
Don't go away. I've got plenty more questions to ask of Lauren after the break. Welcome back to this episode of the Smart Property Investment Show. I am joined by Lauren Croker. It's been a very enlightening episode so far, Lauren. Thank you so much for sharing your story. To everyone who is listening along, no property portfolio is too big or too small to ever be talked about on this show, so don't hesitate to reach out. I'm really glad Lauren did. I'm loving talking to her about, being a farmer, looking to regional land and properties and what you can get out of those. We do hear so much just about the capital cities, so it's nice to look outside of those. And Lauren, I'm very curious how you have that split up. I know that you've got, obviously, your own properties and then you've just gone in with your husband, and that's kind of changed things moving forward. But is there a very certain defined line between having the farm and then having investment properties? Is it something where you don't really touch one to look at the other? Or, if you're looking at new farmland, do you pull equity from the residential side of things? Or have you worked out that kind of thing yet?
Well, all in theory, yes, we have. So basically, any equity that's there in the farm, we will leave there in the farm to either fund future land purchases that are close by or adjoining our current farm, or anything that will complement that farming business. When it comes to the investment properties, generally my income will continue to support the purchases of those residential rental properties. And if we need to lean on those when it comes time to purchase more farmland, then we will, but it won't go back the other way. Yeah. Because that's how farmers work.
Of course. So, talk us through that farming business and what you are doing on that side, because I feel like that in itself is very interesting and it does lend itself to having that entrepreneurial, business-minded spirit, I think.
Yeah. So we run a sheep and cattle farm, mainly for beef and for meat, but we do have merino sheep there as well for wool. At the moment, sheep and cattle prices have basically halved on what they were from last year. So at the moment, we are, like my husband and I are, in the workings of making sure that we can make our residential properties really work for us and have them as a backup, because there's a very, very good chance that we might not make any money from the farm this year at all. So it's all about trying to balance that out. And at the end of the day, we want to be able to keep the farm and make sure our livestock are kept healthy.
It all makes sense. I'm also curious then whether it lends itself to the same kind of decision making. Does it make you more risk adverse? Does it make you more likely to take risks on the residential side of things when you're looking, to make sure that you can protect those farm assets?
We probably take a more conservative approach when it comes to the off-farm investment, because neither of us are doing that full time. I'm not a buyer's agent, I'm a seller's agent. So it's not my profession. It's definitely a huge interest and a passion. But for something that neither Brad or I can sink 100% of our time and energy into, we need to have a safe investment there that we can sort of set and forget.
Mm-hmm. And so that will be sort of that process moving forward too. How much time do you need to be dedicating to your properties at the moment with 3 in there? But I guess bearing in mind that one of them does comprise of 3 units.
Yeah. So up until just recently, I've actually been managing 2 of the properties myself. So the one in Goulburn I still manage, and 2 out of the 3 units in Gilgandra I manage myself still. It just became with the 3 units, and there was, it's obviously a lower, when it's, talking $200 to $220 per week rent, there is a little bit of a higher turnover of tenants in there. Generally, it's always occupied, but I was finding that I was having to lean on my poor sister too much, who's up at Gilgandra, to help me find new tenants and that sort of thing. So I've actually engaged an agent up there to take that on. And then I've got I definitely have an agent in Wagga. So really, it doesn't take up much of my time. Particularly even the one in Goulburn that I manage myself. I've got an amazing tenant in there. He never whinges, he never breaks anything, he pays his rent on time every time. I couldn't ask for a better tenant. So fingers crossed that continues that way, and I keep these amazing people in the houses that we've got, and it's won't chew up too much of our time.
I'd love to know the pros versus the cons then because you've got both sides of the spectrum. You've got where you do own and manage that property yourself, and then you've also got the situations where you have offloaded that. And yeah, those reasons make complete sense. Have you noticed any, unexpected advantages or disadvantages of each?
Well, advantage of doing it yourself, you're obviously pocketing all of your money. You don't have any agency fees. But being a real estate agent myself, I can obviously see the value in having an agent work for you. And that's where, particularly in that Wagga property, to have them there with their contacts to get that unicorn tenant for me and their advertising ability, that sort of thing, has been extremely valuable. With the Gilgandra one, with a higher turnover of lower rental paying tenants, that can at times cause some trouble. I've been quite lucky and haven't had too many issues there, but moving forward, there is definitely a potential there where I can't be there. It's a 6-hour drive for me to get there, or 5.5 hours drive for me to get there. It doesn't really make any logistical sense for me to continue to manage those on my own. So that's where those, if there's a big distance barrier, then there's definitely a huge advantage of having an agent.
Talking through all of this today, I feel like you haven't made many mistakes along the way. Like everything has worked out so well. Is there anything though that sticks out in your brain as to like, no, this didn't work, or I wish I'd gone, benefit of hindsight, knowing something now that you wish you knew earlier?
The equity thing, Grace. I just wish that I knew about the equity. I could have, my portfolio could have been so much bigger. I'm so grateful for what I've got, and I feel, I feel like I'm in such a great situation here where I can leverage that. But I've missed out on 9 years there where I could have been in the game, and I could have been taking opportunity in the Goulburn market before it hit that huge boom, for somebody in their 20s to continue to buy something around close to where they are. It would have made so much sense, and I could have been in an even better financial position now.
Hindsight is 20/20.
Yeah.
Your portfolio is healthy now. How much is it valued at total now?
So total value of, whether I did have this written down, about 1.5 million, 1.55.
So pretty good. And how much of that is mortgaged at the moment?
900,000. So an LVR of 62%.
That's not bad going.
Yeah.
A bit of equity still you can be pulling on from all of that for that next purchase.
Yeah. Yes, hopefully. Find the right one.
Yeah. How long till you pull the trigger, do you think?
We have been looking since the beginning of the year, but just through various time constraints, basically being able to go and actually physically look at properties, we haven't pulled the triggers yet. There has been times when I've been thinking about engaging a buyer's agent, but then I have so much fun looking myself that I kind of don't want to give that candle away to somebody else yet either. So
fair enough. While you're enjoying it, you might as well keep doing it. Lauren, I feel like this is the perfect point to finish our episode, because as soon as you buy that next property, I want to hear from you again. So we'll have to get you back on. You'll have to let me know when that happens. Best of luck with looking and enjoying the hunt for that next property. And I can't wait to chat with you again when you've achieved it.
Awesome. Thank you. And thank you so much for having me on the show.
Of course. It has been an absolute pleasure. As I said, already looking forward to the next conversation. To everyone who is listening along, we hope you have enjoyed this episode. Like or review us on whatever platform that you do listen to the Smart Property Investment Show on. If you have any questions, or you're like Lauren and you think that your portfolio might make you a worthwhile person to jump on the show, reach out, please. editor@smartpropertyinvestment.com.au. Check us out on social media, Facebook, Twitter, and LinkedIn. Subscribe to our website for all the latest news if you haven't already, smartpropertyinvestment.com.au. Until next time, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.